to find fault in one aspect of U.S. equities trading, and that is, from the SEC's perspective, demanding this fee pilot. And yet we really haven't questioned why the fastest growing aspect of U.S. equities trading is off exchange and dark pool growth. And why is there this movement to dark? It's silent, and the SEC has not wanted to tackle that as eagerly as they appear to be wanting to pick one aspect of trading, and that is incentives to quote. So it's really an unbalanced review of market structure, which is really calling out for a much deeper dialogue, and that's our invitation and has been our invitation. So, long answer to how does this end well? We open a dialogue, we look at market structure, recognizing that, well, maybe this growth of out of control off exchange trading, which served a purpose for large trades that otherwise perhaps would be moving the underlying markets, why are limit orders now being taken off of lit exchanges right when they become executable, marketable, and trading dark? There needs to be a greater dialogue, not just focusing on one aspect of market structure. We closed on BATS 2 years ago, beginning of March. So what Chris Isaacson, our now COO and at the time CIO, led out and gave us a very transparent roadmap on migration from legacy Cboe technology to BATS tech. And so the last exchange, Cboe, our largest and most complex, is scheduled on time scheduled to roll over to BATS tech in October. And that will be the last of the exchanges migrating to BATS tech. The asset classes we're in today, we have so much more work to do. We are not fully penetrated, we believe, in the volatility space. Our FX has been growing and outpacing a lot of the growth we've seen in other asset classes. I think European equities, there's obviously, until we understand any of the tail on Brexit, it'll be difficult to predict European equities. These, as a reference, the strategy with Brexit is business continuity, where a year ago we were talking about MiFID II. That was opportunity. So what can you bring your customers to accommodate their needs in a post-MiFID II world? It's periodic auctions for us. It's large and scale trading and block trading. It's trade reporting. Those were opportunities that we brought to our customer. This is continuity in Brexit. How do you allow and make sure your customers can transact in a post-Brexit world? So it's a completely different look. So it's hard to predict that asset class. U.S. equities is, again, I say the move from lit to dark. We must figure out competitively what that means. And therefore either able to compete with an offering lit that can draw flow back lit, or how do you compete for this incredible chunk of business that you're not able to access?